Hello and you're welcome to CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha Gupta with your daily dose of commodities, cryptos and currencies. Well, a quick look at the global equities first of all, and the three major averages notched their second straight positive week. The Dow climbed 1.7%, while the S&P 500 and Nasdaq Composite rose 0.9% and 0.8% respectively. It was also the fourth week of gains out of the last five for the S&P 500 and the Nasdaq. Well, stocks in the Asia Pacific are trading higher as investors are keenly watching out for the details from the talks between Trump and Zelensky, in addition to various European leaders who seem to be accompanying Zelensky for this meeting. Meanwhile, the crude oil prices have continued to reel under pressure as the U.S. did not exert more pressure on Russia to end the Ukraine war by implementing further measures to disrupt the Russian oil. The exports after the presidents from both the countries met on Friday. In fact, Trump said he did not immediately need to consider retaliatory tariffs on countries such as China for buying Russian oil, but might have to in the coming weeks, in 2 or 3 weeks, is what he said, cooling concerns about disruption in the Russian supplies. While we did see 10% of decline in the month of August until now for the crude oil prices, it's a very marginal green coming in the Asian markets on your screens at this point in time. Well, for further sense on the crude oil prices going forwards, we have seen a lot of choppiness coming into the markets there. Joining us now to talk further about crude is Sara Vakhshouri. Sara, hi, thank you so much for joining in. How are you looking at the crude oil prices right now? Because the markets are reading into higher supplies, especially from OPEC, even US for that matter. How are you looking at supply and demand for that matter for the next 12 months now?
This narrative in the market that we have an oversupply and the supply is above the demand has been there quiet sometimes for some times. Last year, the market was worried for Chinese post-COVID recovery and economic function. This year, there are worries about the tariffs and U.S. Tariff negotiation with different countries, and the potential that the global economy will slow down, so eventually the demand will not catch up. But if you look at it, the aftermath of projections, we see that demand has been stronger, further and higher than what analysts expected, both last year and so far this year. We also have the geopolitical wild card. We had some conflicts in the Middle East. But also, if you look at the inventories are all, for instance, in the United States and also the other OECD countries below the 5-year average. So if you look at the United States, for instance, all of them, crude oil, gasoline, diesel, all these inventories are below the 5-year average. And also the refinery utilization, if you look at it, is very close to 100%, almost 97%, which all of these are above analyst expectations. And we have some of the data producing institutions like EIA that constantly correcting their demand expectation and moving them upward. So as of now, the market is kind of in a balance mode.
I get your point there. Yes, the U.S. inventories are below 5-year average and there's not so much spare capacity. You also spoke about tariffs, Sarah, and the meeting between U.S. and Russian presidents is done with. And now the U.S. president is meeting European heads and Ukraine's Zelensky. The tone has changed from ceasefire to a peace deal now. What are the various scenarios that you are working with in sense of supplies from Russia and the price impact of that?
The sentiments of the market is going to be impacted. So there is going to be expectation of more oil in the market, and we might see some reduction in the prices. But if we look at the physicals, market fundamental, Russian oil has not really gone out of the market since the conflict with Ukraine, even though there has been European and US restrictions on Russian oil export. The only thing we saw was a change of oil trade flow. So the Russian oil that historically used to go to Europe now has changed its flow, going mostly to east of Suez Canal to India and China. And the producers from GCC producers that they would historically send and ship their oil to east of Suez Canal to Asian markets now are mostly sending their oil to Europe. So we didn't really had Russian oil physically out of the market. We just had a change of oil flow. So I would say both scenario, either if they reach to an agreement or not to an agreement, you're not going to see any changes in physical market. There might be some impacts on the sentiments, and prices might go up or down depending on the results of the negotiations, but that would be a temporary, and they would adjust themselves. And why, if things go to a a worse case scenario, uh, again, Russian oil doesn't have an alternative, because Russia's export in terms of volume and also in terms of quality of the oil doesn't have really a substitute for all of its volumes. And the world cannot really afford to push the whole export of Russian oil out. So we might see, if in a worst case scenario, the sanctions intensify, maybe we might see some displacement of Russian oil, but there is as much as a supply in a market in terms of, let's say, spare capacity. But with Saudi Arabia and OPEC Plus jump in to cover for Russia, obviously Russia is a major oil, OPEC Plus member, so we cannot expect an appetite that other members would jump to cover for Russia. Even if they do, they cannot cover all of Russian oil. So I would say both case scenario, there's not going to be a significant impact in terms of volumes of Russian supply in a market, both increase or decrease, but we might see a change of flow of Russian oil.
Sarah, that's about the supplies in crude in the global markets. How's your sense on demand going ahead, especially from Asia, where China imports have been strong in the last 2 months? India, with tariffs now, of course, seems to be struggling. But would you say that much of the incremental demand growth in the global markets would still come in from Asia, more so from India?
So it depends on when we are talking about. If you're talking about immediate demand within the next few months, or in this the 2025, definitely if there is a positive news coming out from, let's say, tariffs or negotiation with Russia, the sentiment over stronger demand is going to impact that market, and the global economy are going to perform obviously higher. So the demand is going to continue being strong for the rest of the year. However, if you look at it for medium term, definitely we are looking at higher demand. As you mentioned, Asian countries, China's economic performance and consumption has been much higher than analysts were expecting last year. India is definitely strong. Most of the economic and data producing institutions have been forecasting in a strong demand for India, but also the rest of the world. So yes, where the negotiations over tariffs and U.S. Business negotiations with multiple countries are all going to have impact on both the sentiment and actual demand. But as of now, what we see is that President Trump could, obviously using both carrot and a stick with the countries that are negotiating, but somehow they have been successful to come up to some sort of deal with countries one by one.
Clearly, from where we stand right now, it clearly is not a uniform tariff, and India clearly at the taking end. But, the crude oil prices, and I've been talking, Sarah, to a lot of experts, banks, brokerages even, and they tell us that crude prices could be anywhere between $55 to $75 a barrel. What's your view on the prices, let's say, for the next 6 to 8 to 12 months from here?
I'm the one that usually I try not to forecast, at least publicly. The reason for that is that there are multiple wildcard and also narratives in the market. So what we are trying to look is to looking at where actually the physical fundamentals are rather than the narratives. And of course, we have not only the traders, the actual human traders that are deciding for all these future and contract prices and decision, but is algorithm. An algorithm is highly affected by multiple narrative and a mind that is hard for many traders even to understand and to predict. So it's very hard to navigate that, because if you look at the traders, the physical oil trader, the paper traders in the stock market, obviously they all have their own narratives. They are all, let's say, short. Most of the narratives are talking about oversupply. But also we have the wild cards on the table. We might have the geopolitical factor intensified, particularly between Iran and Israel. We also have those tariffs negotiations between United States and multiple countries that could have impact both on the physical market and also on the sentiments.
All right, I get your point there. But Sarah, the crude oil prices have seen a decline of 10% for the month of August. Now, decline also is seen not just in crude prices, but other energy products like the natural gas, the heating oil, etc. Natural gas has been trading around that $3, even below that for some point in time. Are you looking at this pressure continuing?
Again, when I want to answer to that question, I would like to answer it within the time frame, because if you look at it at the short term, yes, we might see the inventories increase. But if you look at it into medium and long term, natural gas is a commodity that, because of the growth of demand from data centers, AI, and generally overall electricity, and also cooling, that we see the demand also for electricity in producing water or drinking and safe water. We see that all of the demand is moving toward a direction that natural gas particularly is going to be in high demand in the medium to long-term future. So again, looking at it in a short term versus long term, we might see a very total different perspective and view.
Point taken. Now, with the push towards EV, and as you mentioned, it's about AI and electricity, etc. Are you reading into peaking in oil demand going forward? Also, the crude oil demand in petrochemicals still continues to be stronger, as has been the case with other products. The U.S. priority seems to be changing with the more push towards crude oil. Would you say it's a confused world right now? And how are you looking at future demand?
So as you mentioned EV, what we saw is actually we have seen a peak in sales of EV cells, but also in countries like United States. We also see in some European countries, some of those incentive policies that they were pushing the EV purchases have been tampered off, like in United States, for instance. And if we look at it, first of all, in terms of oil consumption, we're still having oil consumption even in production of EVs. The auto body is used the oil. So the peaking in oil demand, I think that we kind of moved beyond that, at least in the past year, that there has been this overall understanding and consensus that oil consumption, particularly in petrochemical, even if we call it a wind turbine blade or the whole lubricants producing auto bodies for EVs, is going to continue. And so the peak demand over oil, I think there's a lot of debate on it. But when we look at the EV, if I want to separate that, for countries like the United States, the priority has changed. What we see that President Trump announced the state of economic and energy emergency. Why? Because we suddenly kind of wake up and seeing that our electricity demand is increasing significantly because of the data centers, because of the AI, and now we have to prioritize where we want to use that electricity. So further incentivizing EVs that is going to use electricity needed further infrastructure to increase the electricity demand, capacity in our grid in the United States for EVs is not anymore a priority. But also there has been this realization among kind of, I would say, globally, that if you compare an EV with a combustion engine, again, it's a priority for different cities. For maybe Beijing or Mumbai, that you are maybe using natural gas or EVs is good for the congested cities. But overall, looking at the pollution and harm to environment, when you add the life cycle analysis of the pollution, from mining to producing an EV and then recycling those batteries, I think that there has now been this understanding that what is going to come out of a car exhaust or right at the consumption when you are driving is not necessarily determining the overall pollution and harm to the environment. Because looking at that EV, that electricity has been produced in the United States. We have some of the states that electricity is produced from coal. So I think that the world is coming to a better, clearer understanding, both in terms of life cycle analysis when it comes to environmental damages, but also into priorities when it comes to electricity demand particularly.
Fair point. That, Sarah. Thank you so much for joining in with all sense and sense of energy. And as you said, well, yes, the peaking oil demand conversation perhaps is slightly in the past there because electricity and AI and EVs is where we seem to be moving in. But clearly, the United States also has changed its priority. So, well, the inventories have continued to be slightly on the weaker side. And that, of course, has been supportive for the crude oil prices, where we already have seen a very sharp decline. Sarah, thank you for your time. Appreciate you joining us here at CNBC TV18 Prime. Well, with that, it's time for a short break. On the other side, we will be joined by Edul Patel of Mudrex to track the surge in cryptos. We have seen crypto prices, crypto market cap, and of course, NFTs, hashtags. We have also seen the mining rates also continue to increase. What is the impact of all of that in the global markets? It's something that we will discuss with after this break. Welcome back. Joining us now on the show is Edul Patel. He's CEO at Mudrex. Edul, hi, thank you so much for joining in. And crypto clearly has been a conversation and a headline all of this year and continues to be so with the prices and with the way the market cap continues to rise as well at $4 trillion. And it's not just Bitcoin doing well. It's altcoins, it is stable coins, it is NFTs, it is real world asset tokenization. Almost everything in that sense, in that parameter seems to be doing well. How would you say on how the 2025 has been for you till time?
I think, as I said last time when I was here, 2025 has been great, primarily driven by regulatory acceptance world over, specifically in the US. We knew that the technology was ready for it, but the regulatory clarity has just turbocharged the rate at which people are investing, participating in the wealth creation that's happening in crypto and broadly different parts and subsets of crypto. We've seen that with stablecoins, where stablecoin adoption has grown immensely. We are seeing that with assets like Bitcoin and Ethereum that are gaining a lot of traction, primarily from institutions. We are seeing that now in a lot of real-world assets as well, where tokenization of government securities and tokenization of real estate continues to gain some traction. So it's been fairly bullish, and we expect it to continue to be this way closer till the end of the year as well.
Edul, the way the prices have been moving, we've seen almost everything also impact the cryptocurrencies, whether the same way that it has done to currencies and perhaps equities. The crypto markets also seem to be looking at the same fundamentals. From where we stand right now, what do you think is going to impact the prices from here?
Yeah, so I think effectively what's happening is that broadly, macroeconomic data is very bullish and very positive. CPI data is expected to be great. As a consequence of that, it's expected that there might be a rate cut later on in the year, starting September. The odds of a rate cut on things like poly market just continue to grow. All of that is being priced into risk assets. Risk assets are broadly, at this point in time, equities, which are non-Max 7, as well as stable coins, as well as, sorry, not stable coins, as well as crypto, which is Bitcoin, Ethereum, and so on and so forth. As a result, we are seeing this sudden price increase. Interestingly, what's happening is that most of this is happening from smart money and institutions. So large institutions and institutional inflow is growing. We are seeing new ETH treasury companies come up. We are seeing inflow into Ethereum and Bitcoin reaching near all-time highs, and that's causing this price to move in an upward path. And I think that trend will broadly continue. We saw that price increase and then some stability coming in, and then as well a price increase happening. This happened with Bitcoin. Because of all the institutional inflow, volatility in Bitcoin is also at now a all-time low, which means that Bitcoin is now kind of sort of become range bound, and it's growing these ranges. The same is becoming true more and more for other assets like Ethereum. So we'll see how the rest of the year goes.
Oh, well, absolutely. For the Indian markets, though, Edul, what cryptos tend to do well? We understand Bitcoin is an all-time favorite, and why not? And then it's Ethereum. But what other cryptos do well for the Indian markets, and what geographies do well for us?
Yeah, so I think at this point in time, it's not like for Indian markets, some crypto tokens are different. That's actually a very unique and interesting thing about crypto. It's one of the only global asset classes out there where pricing is very similar across the world, which is like there are only a handful of other commodities like this world over. So as a result, crypto prices are impacted by global events based on whatever happens globally. Uh, so that's on the price action. Having said that, uh, investors and traders in India are unique, and we see very divergent behavior, to be really honest. On the one end, we see long-term retail investors doubling down on just Bitcoin, Ethereum, maybe Solana, maybe BNB, some of these assets. And they come in from the perspective of buying and holding, doing regular SIPs. So that's a lot of action that we've seen off late over the last month and a half. And then on the other extreme, on the trading side, where we are seeing a lot of speculators wanting to continue to speculate and take advantage of the price action, we are seeing a lot of activity on some mid cap and small cap tokens, as well as on derivatives, where users are able to use leverage and short the market in some sense. Uh, from that perspective, this behavior is very similar to how Indian investors and traders are actively trading on the equities market and the F&O market, where if you see again in the equities and F&O market, you see a large amount of inward, what do you say, recurring SIPs and recurring investments happening in mutual funds, specifically large cap and diversified, whereas the F&O market and F&O traders are active a lot in the small cap market from a trading perspective and are doing index derivatives.
Edul, also, when you look at the overall market right now, and of course, we've seen more smart money move in, as you said, it's been about HNIs and ultra HNIs, and family houses also starting to invest in case of crypto here. Where would you see India in sense of ranking? I mean, we do know that it's one of the largest, fastest growing markets right now, but do you see that pace holding on?
It's one of the largest and fastest growing markets, but the participation is not large. By that, what I mean is maybe millions of people have invested in crypto, but the amount they've invested is very small, maybe 500 rupees, 1,000 rupees, something that people would just want to put in to try. And the change that we are seeing right now is that large investors, large HNIs, and family offices are now starting to put in serious amounts of capital. When I say serious amounts of capital, again, still 3 to 5% of their net wealth, but 3 to 5% of their net wealth is large. And that's what we are seeing now grow. And that's a secular trend that we are observing. And maybe it's most of these funds, family offices, institutions are taking clues from their global competitors and their global counterparts and seeing how they've deployed capital and are seeing the learnings that they've had by investing globally and adopting those same strategies in India.
When it comes to India, Edul, yet again, and there are more exchanges with perhaps more coming in as participation increases, and the fact that the prices are holding firm and there's more interest now coming in also is quite supportive. How are you looking at the global exchanges now, looking inwards, looking into the Indian markets now? And do you see, as you said, number of participants are more, the quantity or the amount deployed is less. Do you see that changing with more and more people eyeing Indian markets?
Absolutely. So I think the reason why the number of participants are more is not because they've come in now, but they came in the earlier market cycles, and primarily their motivation at that time was speculating. 21 din mein paisa double, the standard like mentality that early on comes in, and that's why it's remained at that level, right? But what's happening now is because some of these large players are also coming in, and platforms like Mudrex are working hard on educating the market. The understanding is being developed. And again, that's something that we saw in the equities market as well, right? For the equities market to grow, a lot of education had to grow in, a lot of players had to work towards educating people, giving people information. The mutual fund industry had to run a campaign called as Mutual Fund Sahi Hai for about 10 years before we saw all-time highs in mutual funds happening. So I'm actually very excited with a lot of people coming into this market, because that just means that there are now more people incentivized to help grow the market. And markets grow by educating the consumer, by helping them understand why they should participate in it and why they should kind of sort of start thinking of crypto as this another new asset class that they should be investing in from a very long term perspective. So that's how I'm thinking of it. That's one part. The second part is that what also happens is that with this education, the education not only for the masses and the consumers, but also for regulators, policymakers, and government bodies, right? And what we also see is as the market grows and it becomes more important, these other important key stakeholders also need help in terms of trying to figure out, okay, what's the pathway in which we need to take crypto. or what's the pathway in which we need to take this industry? Because in reality, crypto is not an asset, not a commodity, not a security, not property, yet somehow all of these club together. And what's happening now is that individual parts of it are being pulled out and being regulated separately. That's what it is, what we are
Absolutely.
seeing. Right? So in the US, we saw Bitcoin and ETF get kind of sort of regulated via the SEC ETF pathways. Then now seen stablecoins being regulated via this Genius Act pathway, and now a new called as the Clarity will come out soon. I think the same will happen in India as well. And this happens once large enough players come in, they spend time in educating and creating and growing the market.
I get your point. Very, very nicely said that when you look at Bitcoin and Ethereum, you have spot ETFs. When you look at stable coins, there's a different tag there. And the rest of the altcoins really seem to be fending for themselves right now. But very interesting. Yes, it's a huge market and a global market in true sense. That is, and we are looking at finally that a lot of education coming in, and education for all, as you said, not just participants, but for exchanges, regulators, ministries, authorities, and in a global sense as well is something that perhaps will need to be done. Edul, always a pleasure to have you on the show. And thank you so much for making sense of the whole segment yet again. But with that, that's all the time that we have on this episode of Big C. Thank you for watching.